The rush is on to beat the April 15th tax filing deadline. Joining us now is Andy Phillips, Vice President of the Tax Institute at H&R Block. Happy to have you here. Many Americans will be busy this weekend working on taxes. What's your advice?
Yeah, I think the biggest thing as we go into the final crunch is that people really understand a couple things. One, if you do a refund, file as soon as possible, get that money in your pocket. But if you're expecting to owe, sometimes people keep putting off filing because they're worried they can't pay. Couple things I want to talk about. One, even if you file today, you still don't have to pay till April 15th. And wouldn't you rather know as soon as possible how much you're going to have to pay so you can start making a plan?
Good point. What else?
Here's the other thing is even if you can't pay on time, make sure you file a complete tax return or at least an extension. Now, an extension of time to file, or that's an extension of time to file. It is not an extension of time to pay, but the penalty for failing to file on time is up to 10 times more than the penalty for just failing to pay. So even if you can't pay, it's going to save you money in the long run if you still go ahead and file, and you can start making a plan to maybe pay, an installment agreement or something like that. So doing the ostrich approach and just trying to ignore it is only going to cost you in the long run.
What are some tips to maximize a refund with tax deductions?
One, people don't realize that life changes, whether it be getting married, having a kid, starting a business, those mean tax changes and potential tax benefits, maybe leaving money on the table. The second thing I'd say for people is when they put it off to the last minute, they get in a really big rush and they make mistakes. And those mistakes, again, can cost them money, or they may just cost them a headache because they leave out a W-2 and they've got to go back and correct it. So, and it's both. May leave some money on the table and you may have further headaches down the road.
What about investing to avoid some taxes?
While you're still working, you need to be thinking about saving for retirement. So putting money, if you work for an employer, putting it into your 401k or whatever, plan you have available. And then looking at, you can, in addition, contribute to an IRA. Now, here's the thing. That money you put into a 401k, for example, with your employer, that's going in pre-tax. I mean, you're not going to pay tax on the amount going in there. Likewise, if you contribute to a traditional IRA, subject to certain rules, you may be able to deduct that contribution, meaning you're reducing the amount of tax you have to pay. So really being thoughtful about how much money do I have to contribute? What are the limits for an employer plan? I'm self-employed. I have a self-employed retirement plan, or I just have an IRA, because that again gets you the tax benefits and it helps you save for retirement, which is really important.
Does it matter if you file by mail or online?
The IRS permits people to file electronically or file, via postal mail. Strongly encourage people to file online. You get immediate verification that the IRS received your return for processing. You get immediate proof that you filed. If you are someone who's going to file by paper, one, I'm going to advise against it. But if you have to, make sure you send it certified or some other way where you have documented proof that you submitted that tax return to the IRS on time. And if you're due a refund, make sure you take it via direct deposit. Those checks take a long time to get to you, and there's a risk they can be lost and or stolen.
We thank you, Andy, for your tips.
Thank you for having me.